Hello, everyone. It is Friday, the 14th of August. I'm here with Clem Chambers from anewfn.com. I managed to get the top lists saved on my browser so that I can see real-time movers, well, on the upside, or on the downside, because I'm not interested on the downside. But good to see you, Clem, and how are you doing?
I'm doing good. I'm going to swap glasses to get in line with yours.
That's frightening. It's not as frightening as me, but it's frightening.
Oh, I don't want
I've
to scare you. Let's go back.
Yeah, I've seen plenty of your videos popping up with a sort of over animated face. What have you been
Yeah,
talking
well,
about this?
that's right. I mean, it's attention maxing. They're calling that. And at the end of the day, what's the point of having a great video if nobody clicks on the thumbnail or the title? Because Google only cares about your title and or your thumbnail, or rather, people only care about it. And I have a whale of a time making those funny ones because it just makes me laugh. So hopefully it's making other people laugh. And one shouldn't take this stuff too seriously because at the end of the day, it's only money. But it's if you get too stressed out about stocks and shares, you're going to do badly at it, aren't you?
How do you avoid getting stressed out about it?
Well, it's a mixture. I mean, I remember about, I don't know, 10 years ago, because obviously as you make more money, you increase your size. You might increase your diversification, but at a certain point, you even at 35 or 40 stocks, the size is getting big. That used to make me nervous because all of a sudden it was, you're putting like a car down on a stock, or maybe getting towards a house if you happen to live up north, and you're not used to it. But over time, you adjust and you burn your nerve endings off or whatever you're doing, and you get comfortable with it. So it does take a lot of time to get comfortable with investing and with the size that you're operating at.
Well,
And if you're doing it properly, obviously that size goes up. And so, you just have to adapt over time. But if you can't adapt, you've got to scale it back, haven't you?
yeah, well, you reminded me a couple of things. One is where you were talking about the Ocado trade 2 or 3 weeks ago, and I've known you for 25 years, and I've known a guy called Ronnie for the equivalent amount of time, and maybe 30, almost the same, 30, 25, 30 years. He used to be a broker, Merrill Lynch, et cetera, et cetera. Now he trades full time. He traded full time largely because he couldn't get a job after being at Merrill Lynch. So it wasn't actually, but he knew his stuff, and he knows his stuff as much as I was going to say you or I. I'm not quite sure I'm in the same league as you, but he knows his stuff. And I haven't been in contact with him for about 10 years. But now he's got a sort of WhatsApp group of 60, 80 people. And it's great for research in the sense that, and maybe this is also relevant to a new FM. Actually, I wasn't thinking of that, but maybe this is. And you got the great and the good of the city, and a lot of London sort of investors in there. And it's like, Aviva's results, what do you think? Blah, blah, blah. They're already at the year highs, but let's go for it. It was better than expected. All this sort of stuff like that. So they've got that sort of camaraderie. They've got all the broker notes. They've got all the information. And you sort of think, even for me, I was thinking, wow, this is a hot group. I mean, there's a lot of info in there. They're all looking at X or Twitter. They're all, they're people who've been in the game 20, 30 years at least, in middle-aged men, basically. And it's great in the sense that it's a great, I can just copy what they say. So yesterday, Ronnie said, I'm going to buy the FTSE at 108.35. And it was the low, and it went to 108.90, and lo and behold, and he's just doing it's like he's not even thinking about it because he's so on it, right? It's a bit like being playing cricket or playing whatever it is. He doesn't need to, he sees the ball, he knows where the ball's going to land, or before it's actually sort of done,
In the
that
flow,
in the flow,
in the
right?
flow.
And so he's
Mhm.
totally in the flow, and it's like, today, WH Smith, it's like world travel is up 80%, blah, blah, blah. WH Smith's going to do well because they rip people off at airports, okay, I'm going in there at the lows, that kind of thing. And so that kind of resource is amazing for a WhatsApp group. And obviously, he's very fussy about who's in the WhatsApp group. So I only managed to grovel my way in this week, which is why I'm talking about it. But it would be people like you and me who are in that group. It wouldn't be beginners. But the sizes of the trades, and the Ocado trade was the first one that, he was in at 180, went down to 145, 150. He bought more because he just said, this is wrong. This is just ridiculous. And he's still in there at 250. Now, there's two things there. One, lesser people would have just got out at 145. Even less, even more lesser people would have, when it went back on in profit a bit, 180, 190, they would have got out, and almost nobody would stay in for the 250 that's there now. So those
I
are,
got in at 223. I
yeah,
don't know
yeah,
what it is now, right now
like
because
245, 250. But what I'm
yeah,
saying is that the mentality of being a successful trader or investor is so counterintuitive to daily life and the way that people normally think. And it's something that I saw the other day as well. Sorry to go on about this, but I think
no,
it
no,
is.
go on, please.
I saw the late great David Paul, who was he was a sort of educator in the markets and everything else, and it was a proper investor and trader. He said that the difference between a successful trader and an unsuccessful one of the differences is that when an unsuccessful trader sees the market going down, it becomes more and more optimistic and go, on his positions. And when it goes up, he goes more and more pessimistic about his position. So he cuts the winners and keeps the losers, and become more and more. The Ocado goes down another pound, and he thinks it's even better. And so you have those. You're hardwired. Basically, we're all hardwired to lose money in the markets.
No,
80% of us. And
no,
what is it then?
no. Look, at the end of the day, the market is mainly random. So if you buy when it goes down and you sell when it goes up, yeah, it's just as good as buying when it goes up and selling when it goes down. Yeah, it's 50-50. Now, the
Right.
actual signal, the skew in the normal distribution random curve, yeah, is 7% a year. So divide that by 250 and you get it's like a nuppence, right? So the chance of you being randomly right in a random situation is 50-50. So most ideas, oh, well, if you do this, you do that. It's 50-50. The trend is your friend to the bend in the end. Well, the bend in the end cancels the trend, etc. Everywhere you look, you'll see that, right? So what you have to do is you have to find the tiny little things, the tiny little skew edge in all the noise, and you have to back that, which is why I don't go in groups. I'll be the last person in that group. I don't care whether they're right. If when I read the history of successful investors or traders, whatever you want to call them, most of them are lone wolves. Yeah, and when they go, like there was the guy famous, Davas, Nicholas Davas, who made these days hundreds of millions trading. The moment he went to Wall Street and went around looking at talking to people and going to proper brokers, he started losing money. If he was on a cruise ship teaching people how to dance and he was telexing his orders, he was making money. Yeah, because the crowd are 50-50. And if you trade in and out, you've got your costs, so you'll lose. Yeah. And if you go with the crowd and you overbet, Kelly criterion, pay attention to, but you overbet, you'll lose faster. Yeah. So if you're on your own and you see, I was saying this to somebody today, and it was on my X actually, he'd taken his account from 1.3 million to 20 million in the recent bubble. Yeah. And it had gone down to 2.7. And his broker had sent him a message saying, basically, don't commit suicide. Right. And I actually got one of those messages from my broker recently, which made me go, what were they talking about? Because, all right, in June, I lost 10% of my portfolio. And July, I made a little bit back. In August, it's all back. But, that's the game you play when you're in the stupid markets like we're in. But the point is, that he'd made 40%, but he risked destruction because he was over betting. Yeah, it's lots of technical things in this matter. And if you take care of the basic technicals, and what I said to this guy in my little comment was, don't follow other people's narratives, make up your own and then test them. And if you make up a narrative and the market says you're right, you're set up for life, or certainly for many, many years. But following other people, you're hopeless then, aren't you? Because what have you got? You've got access to a bulletin board that maybe some people are on there, or maybe the market's going in one direction. You've just been lucky. What have you got in your toolkit that means that you can capture that little bit of skew, that 7%? Well, you can buy the ETF and forget about stocks and do really well. I mean, look at the S&P. I should have done that. I mean, I've been trading the UK market, which is really well, but the S&P, if I just put it all in the S&P, I'll tell you what I should have done. Last 3 years, I should have put all my money in the Warsaw index. Well, actually, I shouldn't have, even though it would have done 300%. Yeah. Or in the Kospi. No, I shouldn't have, because that would have been the wrong fundamental move to make. Yeah. You do the fundamental moves to make. If you get really good at it, you make 25% a year. 25% a year is 10x in 10 years, 100x in 20 years, 1000x in 30 years. That's the model. That's what Buffett did. Well, 1000x in 30 years, 10,000x in 40 years, 100,000x in 50 years, right? So live long and prosper and play the game sensibly and make your own narratives. Use lots of tools and you'll do great. You'll do great. You'll do absolutely great. Follow other people. If you listen to my tips, all right, I said Ocado was great, but don't listen to my tip. Listen to my thinking and go, I should think like that. So my thinking on Ocado is it a stock a share? Is it a supermarket shelf picker, like the guys that stand at the end of your checkout in America and put your stuff in plastic bags? I don't know if they still do it, but they used to. Yeah, is it that, or is it a robot operating system company? Well, of course, it's a robot operating system company, isn't it? It goes to supermarkets and says, "Do you know anything about robots?" They say, "No." "Do you know anything about automating your warehouse with robots and do packing and shipping?" "No." "We'll do that for you." "Okay." Yeah, it's a robot operating system company. Well, where's that going to be in 10 years?
In a good place.
That's my thought. That's my way of thinking, right? Forget Ocado. You look at another company and you go, what does it do? I mean, there's a company called Cars. They've changed their name to something fiddly so that people forget that they were the world's most boring company forever. They had a nuclear power engineering company and they sold it. Yeah. Oh, they feed cows and they do okay, but they think feeding cows is more important than nuclear power right now.
It is very important. I think the cows should always come first. But I think the thinking is there. So that is, Ronnie's thinking with WH Smith is that lots of people are kind of flying or whatever it is, or there's 80% traffic up, this summer, whatever it is, right? And that he's going for that. I think ASOS was one which is hated stocks are actually very interesting as well. It's like the
Yeah, very
boohoo's.
interesting.
Yeah, so
Yeah.
hated. So ASOS, £2. There's a guy on X who went into seven figures into ASOS. It's now doubled. Every at the time, everyone was saying he was insane. It's going to go bust, or all this sort of stuff like that. He announced that he was going to SpaceX at $110 last Friday. Obviously, it's now went up to 148 during the week.
Yeah, it might not be a genius in 6 months.
Yeah, but no, but nobody would have. I mean, that it's interesting that it's actually what's interesting for him is posting something and seeing the reaction. If all the punters say, "Oh yeah, ASOS, that's great, yeah, it's going to do really well," it's probably not going to be a winner. If
But
he it's one of the reasons for posting actually. Say, "Oh, it's shit, it's not going to work, it's not going to work." I wouldn't touch it with the barge pole. That's the one, isn't it? WH Smith
well,
is WH Smith is in that kind of character, that kind of thing as well, right?
you know me, I'm a contrarian,
Yeah.
right? And if you are in the herd, your grass is short and smells of poo, and you get you get very poor resources. If you are not in the herd, your grass is lush, but you might get eaten by a wolf. So if you don't mind, the attention of wolves, and I don't care, and come at me anytime. I've had that over the years. Then you get it all to yourself. And literally, I was looking at SpaceX at 110, and I thought, oh, tempted. Oh, and then I think about it, and I go, no, it should be $50. I'll buy it then.
Well,
And it may
no,
never get to $50,
there was two things with
but
SpaceX. There were two things with SpaceX. One was that the day before was the day apparently that one of their rockets crashed on the moon or something like that. I think there was some news it was going to crash or it had crashed or whatever.
yeah,
And
yeah,
the
yeah,
day before also, the Investors Chronicle said, "Oh, well, no, SpaceX, looks as though the shares have gone down. Looks as though the market is worried about how much capex it's going to need and everything else." So Investors
definite
Chronicle,
lot.
So Investors Chronicle, yeah, I mean, it didn't age well. I mean, it would age so badly. It was, within 24 hours, it was completely wrong, which is
Well, I
one of the
tell you,
reasons.
Zach, I keep thinking I should ring up Nikkei and make him a pitch to buy Investors Chronicle,
Yeah.
or the Chronic Investor, as I remember calling it, or other people calling it. Because I mean, does anybody buy that anymore? They must be absolutely burning up money. But I should actually write that email. Hey, Nikkei, would you like to sell the Investors Chronicle for old time's sake?
No, no, I
You
just,
know,
I wanted, I mean, I think I've been into the stock market since I was a kid. I always wanted to, buy, well, not obviously buy it from the shop and then also write for it. I wrote for it maybe a couple of times when, in the summer when there's nobody else. I always wanted to be the trader in Investors Chronicle and always wanted to be like Simon Thompson is and all that sort of stuff. Obviously, it's never going to happen, but it is funny when you see something like that with the SpaceX thing being wrong, and totally wrong
well,
logic.
all the time. I can never remember them being right.
No, the only ones that
I mean,
are right. No, the ones that are right. The ones that are right are the ones which are marked up on Friday morning by the market makers because Simon Thompson has written about them. Those are
well,
the
fair
ones that
enough.
are. So
I
those
know
are the
that's a
ones,
strategy.
and obviously then they go down five. They marked up 5% on the Friday, and then by the end of the day they're back down again. So those are the ones that are right, right? But it's the whole thing behind it, the timing of it, the whole way it works is really 20th century, and obviously it worked really well in the 20th century. But it's a different
Well,
world
they got
now.
a lovely brand in a way. But what I would say is this: is journalists are poorly paid people that have no money. I'm sorry, journalists, but that's true. You're paupers. And if you're writing about stocks and you're still a pauper, well, what advice is that? It's like getting advice on cooking from a starving man. Oh, it's
Well,
not
I was
even,
going to
it's even
say
worse
like,
than that.
getting Arnold Schwarzenegger to write about ballet. I mean, something like that. It's that kind of thing that he's probably not the man to, or the
Yeah,
man to do it, right?
not
Um,
qualified.
or Rachel Reeves to be Chancellor of the Exchequer, things like that. I think that it's one of those, isn't it? But yeah, I mean, I think you're right. But journalists have the. I'm actually NUJ myself, and it doesn't help me at all. But I just thought, oh right, journalists, this is a special thing. You've got to be one of them and everything else. But the journalism in the stock market, and even the people who write for the Daily Telegraph, I think there's Ross Mould, there's one or two other people. Ross Mould, there was an article last week. What the FTSE, it's a record high. Why is it at a record high? And obviously, as soon as you wrote the article, the FTSE is now down, 10% from the high. It's always the other way around, right? It's probably going to go into a massive bear market for the next 6 months or a year because he's written the article. So normally these things it's the other way around. It's a bit like the punters on Twitter. They love something. It's the other way around.
Well, I would say this. I would say anybody that thinks that or spotted that, all they've got to do is open a spread bet account and just go short with £5 on a stock every time they do that. Just go, oh, somebody said this, I'll go short £5 or £10. Yeah. So your downside is pretty zero,
Yeah.
right? And just put £1,000 in there, break it down into 100 different bets, and bet against people's tips. I tell you, I'm writing this book called 50 Brutal Rules of Investing. And I'm now number 43 in. And I think my number 42, which I wrote this morning while I waited for a meeting I was going to have. Well, there's two of them. Number 44 is don't take tips. Literally, number 44. Oh no, that number 44 is sell down so you can to your sleeping point. It was number 43. Yeah, number 43, don't take tips. And number 45, that shows you how close I am to finishing this bloom thing, is where is it? The public is always late. Not as in the late somebody or other, but
Yeah,
they're
yeah.
always late. The mainstream is always late. And one of the joys of doing quite a lot in crypto a few years ago was that the young kids who were doing crypto, some of them in their teens, even some of them probably not even in their teens, is that they see clearly and they come up with ideas that in stock market should have been there all along. And one of them was, you are the exit liquidity. i.e., you're the bag holder. Exit liquidity, and there's a lot of exit liquidity going on in all this stuff, and develop your own ideas, your own narrative, your own story, something that nobody told you, no, it didn't inspire you. You don't have to have many. You can have one if it works. Just get that experiment. Well, like the spread betting idea, right? Just if you think that all the journalists in Investors Chronicle are generally wrong, then just get every issue and short them £10, right? And then at the end of a couple of months, see how much you made. And if you made, you can increase your bet to £15, and then to £20, and then to £25, or just your pot, split it into the same amount of units, but you've got more to go in, and just keep doing that. Because, if you're right, even slightly right, you'll make a load of money. And you can test it out, paper trade it, go onto a new FN, build a portfolio, don't do it with the actual shares, see how it goes. Yeah. And you'll see all these things and, you can test it all out. There's no hurry. There's always another bus coming, always another bus coming. If it's not Bitcoin, it'll be gold. If it's not gold, it'll be silver. If it's not silver, it'll be in the future, copper. If it's not ASOS now, it'll be, I mean, this is something that I realized while I was writing this book that I do and other people should do. It's just watch it. You get a stock like Ocado, yeah. Oh, actually, good example. All the recruitment people, I posted about them because AI threw them up for me. I was looking at this stock and I thought, oh yeah, Hayes Group, I remember them. They're recruitment people. I used to have this other one. I wonder how they're doing. Like for 3 years, straight down. And I thought, good grief, look at that. I mean, recruitment's not going away. What's going on there? So I read up on it. Actually, I said, hey, AI, why are these people in the toilet? And it said, blah, 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 blah. I thought, oh, okay, well, that's not going to go on forever, is it? They're not going down to zero. They're going to go bang, and then they're going to go sideways. So I'm going to watch them. And I wrote a piece. This is what you should do. Watch these things, blah, blah, blah. 4 days later, before I got my piece out, one of them popped up. Yeah. One of them went, boop. Life's not so bad after all. So I bought all three. I said to AI, give me a list of all the people like this one. 8 of them. So tell me more about the 3 biggest ones that I like. Information. Okay, well, no liquidity there. I can't get into these companies that size because I won't be able to get out again. So I broke it into 3 pieces. Blah, 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 blah. AI again had the idea. I would have watched them, wait for them to go like that, but it had done it almost immediately. It's up 45% now in a few weeks. Yeah. So you get your own ways of doing things, your own ideas. Don't watch for other people's. Go onto a new FN and just watch the top list every day. What's gone up, what's gone down. Keep a track of them all. 6 months' time, you'll be their best friends, and then you'll see something happening. You'll go, oh, I mean, what's the one that's going down a lot at the moment? Let me see. I'm going to go on to my top lists. And by the way, you could do one. You could actually look at betas. Somebody said, I don't like volatile stocks. I said, just go to our beta top list and look at all the unvolatile ones on that top list. Or for that matter, if you want to have, if you want to get old fast, have a look at the volatile ones, the high beta ones, and see what you've got. So let's have a look at the top loser percentages right now. Copper companies. Nobody likes copper today. They loved it yesterday. They don't like it today. So there's a good example.
Yeah.
What's going on that one day everybody loves copper, the next day everybody hates copper? Interesting, right? So you watch them all and you go, well, hold on a minute. Why is BP falling today, but Shell's falling more or falling less? Why is that always the case? And why, when they go up, does BP go up more than Shell? And when they go down, BP goes down more than Shell? What's going on there? Can I make some money there? I've had an idea. Ooh, look at that. Yeah. So you come up with the original idea, you paper trade it, it works, you do it small, you keep track of it, and it will work out for you.
So,
You
so
know,
you're so yeah, so you're okay with paper trading. You think it's a valid thing to do?
yeah. I mean, it's obviously not stressful, and therefore doesn't give. You're going to be a lot more focused and a lot more calm when it's not real money. But it
Well,
will
yeah, but
give
then you
you
need yeah, but then you need the discipline to keep doing it and following the position. So let's say
discipline. You're not going to do it, are
no,
you?
but yeah, but I've been paper trading with a 10K account, right? Because I love spread betting and everything else, and but I just like it's the mind game of it. So 10K in the end of March, and now it's 60K. 61K, right? And that's just basically trading the indices and currencies, just the major markets, so I don't like getting bogged down in that. But I don't know how much of that. Obviously, that's like 10K a month, which tax free would be which is just perfect, right? So all I need to do is copy what I'm doing on that demo account with real money with 10K. So
Yeah, as long as
so
they're taking your costs into account, as
yeah,
long as
so
they're not giving you a load of old rhubarb
yeah.
on your bottom line.
Yeah, but I mean, the 10K never it went. Maybe the lowest it went down to was 9 or something like that. It just went, it's basically it's been fine. I wanted to see though what happens when there's an absolute, I mean, that's been going short of crude oil when, before, just during the Iran thing, and long of crude oil when it was, when it was falling, right? So pretty well stress tested there, right? The strategy of that, but. I think that the main thing, the main attraction of spread betting is that we're in a high tax, horrifically high tax, red tape in environment. And what could be better than spread betting? I mean, it just is,
A
it's
lot
like,
of things.
like what? I mean, a glass of
Well, like
champagne?
putting it in an ISA.
No, no, but I mean, yeah, but that's related to it, right? So, some of it, say it's 10K for spread betting and 20K into my, three or four of my favorite stocks. Okay, I mean, the tax-free angle is what I'm talking about there.
Yeah, well, that's what an ISA does for you,
Yeah.
or your SIP. But for sure, if you can, if I found I could, I can't remember. I doubled my spread betting account um, between 2000 and 2010. Yeah, and I thought, okay, I doubled it, maybe 150. I 10x'd my standard account because I got 25% in my standard account, and I was paying 7% interest on my spread betting account because everything you do is charged at an interest rate of 7 or 8%. So you've got to get 7% to break even. But anyway, if anybody can make money spread betting, it'd be someone like yourself. So you start with 10, you get to 60, you move your positions up by 50% or double, carry on going, and then you turn your 60 into 100, and you increase your size. You just keep doing
Yeah,
that,
I think that
or you just hold your size to where it is and
yeah,
take money out.
the issue there, it's like 2.5 grand a week, which is very nice tax free, and it's quite consistent in that way. But the nice thing about it is that it's 10K. Let's say there was some disaster and 10K was gone. Okay, well, I'm not going to do it for another year or something like that. I mean, you just say like that's it, I'm out. But it takes a lot. If you're doing £1 or £2 a point or £3 a point, it takes a lot of effort to blow 10K. That kind of thing, right? If you haven't been, if you've been in
Well,
the
what
market.
I'm saying is, with trading in particular, you have to take money out and spend it because unless you're going to increase your size infinitely, which you can't do anyway, but because before you know it, your head sticking over the parapet and people will shoot you.
Yeah,
Yeah. So if you are turning 10 into 60 over 3 or 4 months, you've got to take 20 out, go spend it, and then take that 30 and see if you can run it up to 100. And then if you go any more, you take that out and you just keep it at that size.
yeah, yeah.
And then you've got an income, right?
Yeah, yeah. It's like 500 quid a day
Yeah,
on average. It's 500 quid a day on average, 5 days a week. It's that kind of thing. So you're not going,
yeah, lovely.
you're not going mad. And as you said, you're not sticking your head again. It's not like your broker's not going to call you up and say, "Oh, well done" or anything else. They probably won't even notice. So it's that kind of account that you want to do. But anyway, we got a few minutes left. Any final comments, requests, statements, whatever.
Well, I've got to say that we've had a liquidity event in the market a couple of weeks ago when everything went up, and now it's paused again. So we're kind of back on trend. But when I look at the FTSE, I just cannot believe how cheap it is, and I find it hard to believe how much it looks like it can go up. And if you don't agree, go look at the Warsaw index like it did yesterday, and I went, oh, it's Poland. I mean, yeah, lots of hardworking people and all that, apart from the fact they're only 10 minutes away from Putin. But when you look at the history,
It focuses minds very nicely, actually.
when you look at the indexes, what it's done, what the FTSE has done, how rubbish that performance is, you can either say it's going away entirely, which it could do because the actual size of the market's halved over the last sort of 10 years in terms of how many shares. Yeah, you can either carry on doing that, but the index is just going to reprice. It's not going to be amazing in terms of the American markets and other markets, like the German market, for example. Just to run the FTSE up against the DAX as you know, as two on the same chart. You look at that and you go, "Holy cow!" Right? The FTSE is going to catch up for a couple of structural reasons, and there's just a lot of money to be made there. And again, it's pretty contrarian because when I say that to people, they go,
Yeah,
"Well, it's been running for 25 years."
it's the ASOS at £2 and it's the Ocado at £1.50, isn't it? It's that kind of
Yeah,
thing.
yeah.
And it's the the recruitment agencies 6 months ago, whatever, that kind of thing. It's like, well, no, what are you talking about? It's a disaster. That
It's
kind of,
gone down so long, it must continue.
yeah.
I'm going to follow the herd, right? The herd says. Well, the one other thing about the herd is that quite regularly it panics and dashes off in all sorts of crazy directions. And I remember as a child watching a field of sheep, and there'll be a bunch of sheep, and one sheep would stick his head up and go, "Bah," and dash off, and they'd all go, "Oh," and dash after him down to the other end of the field. And then they'd stand there for a bit, munching away peacefully, being sheep. And then one would look up and go, and run that away. And they all go, "Oh my God." And they'd run after it. And that's what they did all day. Yeah.
You had a
Perfectly
great
safe
childhood.
field. Yeah, I did. I did.
You learned a lot. You learned a lot, and that's it. That's all you needed to know, really.
I was brought up by a commodity trader and learned to look at things in that sort of way, right? Because that's how A, you don't end up being a sheep, and B, you end up making, good money in a market where 99% of people are in a herd. And the herd has ways of behaving. And if you understand the ways of their behavior, you're in good shape. I mean, the herd can panic and stampede right off the cliff. Better not stand in front of it. I mean, that's what shorters get in trouble over. They don't realize how much momentum the sheep or the cows can have. And you can see that in what happened to silver and gold, and what happened to Bitcoin, and what happened to SpaceX. I mean, SpaceX is a perfect what's the word for it? Diagnostic example for me. I didn't want anything to do with it. I love SpaceX. I go outside at night and I look up at the stars and I see all the starlings go by, hundreds of them a night now, maybe even thousands. You can see 6 or 7 at any one time outside the back door of my castle. So anyway, SpaceX going to be too expensive, going to go down, lockups, blah 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 blah. So I don't want anything to do with it. And then I realize that there's so many people stampeding towards the IPO. There's going to be a nice pop. I'll be out on day one if I wanted to, or hang around for day two. If I've really got a lot of nerve, day three. But in for the pop, goodbye. There's going to be a pop because friends who cut bushes for a living are calling me up saying, "Should I get into SpaceX?" So there's going to be IPO pandemonium. So because I live in Monaco, because I'm not so bad at the markets, I can't have any. International men of mystery are not allowed to have any. So, there you go. So guess what? Bang, up it went. Day three, the peak. Crash, down it goes. So as I put on my YouTube channel, in a year, when all the lockups are gone, that'll be the time the dollar cost average it forever. Put 2 grand into SpaceX if you're not a big deal every year, forever. Yeah, because that thing, and then, pay attention to Musk and hope that he stays well, because that thing will be the Google or the Nvidia or whatever you want to call it of this next epoch. But don't get in at the IPO. Don't get in just after the IPO, like all the brokers offer me. Hey, you can get in when it opens. Yeah, right. Do you think I'm stupid? I got that letter sent to me, by the way. I've got an interesting account with these people. It's reasonable size. They think I'm going to kill myself over 10%. And by the way, it bounced back 9.5 by the time they sent me a letter saying, "Oh, we see that you've taken substantial losses." And I thought, whatever, somebody hacked me. What substantial loss is that? So, at the end of the day, you have to have a idea of what you're going to do and then stick to it. And then it doesn't matter If you think right now that SpaceX, or when it was at the high, is the biggest thing since ever, and it's going to be Nvidia in 20 years, why wouldn't you buy it? Doesn't matter that you put in 100 and it turned into 50. Not really, because in 10 years' time it'd be 500. And if you take that laid back view on it, you'll be fine. If you are laid back about this stuff, you don't follow the herd, you come up with your own thinking, you'll be fine. If you follow people that are tipping, if you read the Investors Chronicle, you will remain in the poorhouse.
On
Unless I
that,
buy it, and
on
then it'll
that,
be a great publication.
yeah, exactly. On that lovely note, Clem Chambers from anewfn.com. Thank you very much indeed. Don't forget to look at the real-time data, the level two, and the top list, which is my favorite on the website.
We got chat there now.
And we
We
got
got chat.
chatting.
We got a bulletin board there now, so you can come and talk about stuff.
Okay. Well, maybe I'll do that.
You should. You
Yeah.
should, Zach. We miss you.
Yeah.
Come
Yeah.
by. Well, I know you get your level two from us,
Yeah.
but
Yeah.
it's at that level two. But I think the cheapest level two you can get is like £500 a year.
Yeah. No,
And if
that's
you want one as good as ours, it's £1,000 a year, and we give it away. It's free as long as you're a private investor.
Thank you, Clem. See you next time.
See you, Zach. Bye now.